This is Matt Russell from the FX Power Course, and welcome to the Daily FX walkthrough.
So here are the four pairs that I will be discussing this evening: the Euro Pound, the Aussie Kiwi, the Pound Swiss, and the Euro Swiss. So let's go ahead and pull up the charts. The first chart is the Euro Pound, and this is the simple support line that I've been using for the past several reports. Prices, as I was mentioning about 2 weeks ago, my last report, last week I did not present the reports. I was on vacation. I was mentioning a possible long trade at these lows over here. Prices have rallied a bit off that low. Not a very inspiring rally, if you will, but again, the target here would be the previous support line, which should now act as resistance moving forward. So if you're in this trade, I would continue to hold the long trade at this point. Again, placing our stop just beneath the low of this candle wick right here, which is in the 87.85 area. The next chart is the Aussie Kiwi, and in this on this chart we have the bounce off that 38.2 that I was mentioning in my several reports past. What has happened here on the daily chart, I'll zoom in closely here. The pair did draft a doji, which is a reversal candlestick pattern, could indicate a potential reversal to the downside. So what does that mean moving forward here? And you can also argue that this is a double doji, two dojis in a row here, but that first doji is a very clean pattern. So moving forward, what you do when you encounter a doji is look for prices. The most important thing is where we're going to place our stop, and that would be above the high of the doji candle, and the high of that doji candle is 129.36 roughly. So we're going to place our stop maybe about 15 to 20 pips above that high. So now what we would look for over the next 24 to 48 hours is prices to get close enough to that stop level, which would justify a very favorable risk-reward ratio. For example, maybe about the 29 figure we might look to enter on the short side, again placing our stop above the high of the doji, 29.36. The next chart is the Pound Swiss, and not much has changed here. This is a simple support line that I've been using for the past several reports. I was mentioning during my last report possible short trade as prices did close beneath that 69.50 area, and right now prices are hovering just beneath the 69.50 area at about 69.25. I don't have a lot of confidence in this trade idea, so if you're in this trade right now, I might exit the trade on a close back above that 69.50 area. This resistance line or support line is not very consistent, not very reliable in my opinion. But again, if prices do remain on a closing basis beneath that 69.50 area, the target for the short trade would be the simple support line off the daily chart. The next chart is the Euro Swiss, and not much has changed here. As I mentioned during my past several reports, we have a classic bull flag pattern here forming. Prices did break out, but again, the rally from the breakout of the bull flag pattern is not very inspiring either. So moving forward here, I really don't have a lot of confidence in the long trade. With that being said, what I'm looking for longer term here, maybe over the past several, maybe for the next upcoming few days, is to wait for prices to come and test the longer term resistance line, which is just beneath that 154 figure. So that's something we can keep an eye on over the next few days. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.